So welcome, my name is Stefan Botma, with me my co-host Werner Hatting. This is Money and Medicine. If this is the very first time that you are watching this channel, the purpose is to try and add value by empowering, creating value, creating information that you as a medical professional can access at any stage in your busy schedule in order to make better financial decisions. Today we are going to talk a little bit about Allan Gray, what makes them unique. We've got special guests in the audience today. And thanks again for joining us in for another episode on Money and Medicine. Welcome. We are talking to Cedric Pilla. Cedric, welcome. Thank you so much for availing yourself. I think tell us a little bit about you. How did you start with Allan Gray, or your career prior to Allan Gray? How did you join the industry?
Yeah, sure. Thank you for having me, firstly. I joined Allan Gray in 2013, and I was a grad. I'd studied at University of Johannesburg. And after completing my BCom Finance, I got an interview with a couple of institutions and ended up landing the role with Allan Gray. And it meant I had to relocate to Cape Town because that's where our head office is. And I worked in various departments and in various roles there. I was in operations doing admin. I was in client servicing. I did a bit of a stint in leadership and then went into retail distribution. So I've been there now since 2013.
Yes, it's been quite some time, eh?
It's been quite a while.
It's been a journey.
It's been a journey, but it's been a learning journey. And of course, like in this industry, you can never know everything. So I learned a lot of things along the way.
Are you born and bred in Joburg?
Born and bred in Johannesburg. So I've been here my whole life. My entire schooling was here as well. So going to Cape Town was a bit of it was...
I can imagine.
It was very different. But I decided to come back to Joburg. I mean, we have an office here. So I'm based here now.
Well, awesome. So Cedric, I'm going to jump right into it. I think a question we get quite often, and a lot of confusion arises from this, is we know Allan Gray is a platform or a LISP, but we also know that they are a managing company, or also referred to as a Manco. Briefly just explain to us in layman terms, what is the difference between that?
Yeah, sure. So Allan Gray, when we were founded in 1973 by the late Dr. Allan Gray, we were founded as an investment company, what in the industry we refer to as a management company. And we were investing clients' money under our own portfolios, under our own brand since 1973. But at some point, we wanted to grow the business, and we started a separate business, and that was our platform business. And if you really want to understand the difference between the two is, let's say, for example, you're a consumer and you're going to a supermarket, right? And you walk into Woolworths, if you use that as an example. If you wanted to buy something like meat or eggs and bread and milk, you can get all of that in one place. Yeah? If that wasn't available, you'd have to go to different places to go and buy all those different products, but you can get them all under one roof. And if you think about a platform in the investment management universe, you can go to a platform to not only get Allan Gray solutions or Allan Gray investment management funds, you can get different provider funds there as well. So on our platform, not only do we host Allan Gray funds or portfolios, we also host portfolios from other management companies, competitors such as Coronation or Ford or Prudential. We have that on the platform so that a client can come to us. It's an ease of admin, so they only get one statement, but yet they're invested in different places. They don't have to go and open up 5, 6 different accounts with different institutions. They can have one account and consolidate all of that into one account on our platform.
Okay, wow. So, Cedric, thanks for that explanation. I think it makes it very, very clear because, like I mentioned just before we recorded this podcast, we get asked the question quite often where a client wants to invest specifically with Allan Gray, and they like the brand, but when you show them a solution, you have all these different portfolios in there, and then it causes some confusion.
Exactly.
So that was a really good explanation. Thanks for that.
Yeah, sure.
We deal predominantly with medical professionals. So as a young medical professional, what solution would you say are ideal to start off with when you start off an investment platform?
Yeah, I mean, it isn't specific to medical professionals, but I think with a lot of professionals, young people working in professional roles, is first and foremost, you need to make sure that you've got your retirement savings set up, right? And I think first and foremost, you think about a product like a retirement annuity fund, where you get the benefit of a couple of things in there. That if you're using a retirement annuity fund product to save money for your retirement, first and foremost, the contributions that you make to that retirement annuity fund, they are eligible to reduce your tax liability at the end of the tax year, right? So who doesn't want to save tax? A lot of us want to save and pay as little tax as we can, and making contributions to your retirement annuity for the purposes of your retirement savings allows you to reduce your tax liability. Not only that, but the money that grows in that retirement annuity product grows tax-free. Right? That's another benefit, is you don't get taxed on the interest, you don't get taxed on the dividends, you don't get taxed on the growth of your money in that product. That's another benefit. But the last benefit I think that's really useful is because you've earmarked these savings specifically for your retirement, creditors can't touch this money. So if anything ever happens to you, in professional practice, if something happens and creditors want to attach your assets, they cannot attach your retirement savings inside a retirement annuity product. So first and foremost, if you want to take care of that as a medical professional, that's probably the first place to start. And then to supplement that is probably one of the most underutilized products in the industry is a tax-free savings account. And if you have a tax-free savings account, it also allows you to save money and it grows tax-free. So the interest, the dividends, and the capital gain or the growth is not taxed. And that also allows you not only to supplement your retirement savings when you go on retirement, but the money is more accessible to you if you need to withdraw it anytime before then. So I think those two products really are where medical professionals could probably want to start thinking about putting things into place.
Yeah, great idea. I think also for those of you that haven't watched our episode on tax-efficient vehicles to invest in, please go to the link at the bottom of this page. You're welcome to watch that episode. It will actually flow nicely into what Cedric was just saying. Just to get back to my question on the difference between a Manco and a platform, what benefits can a client expect by using, what value-added benefits if they use Allan Gray in both scenarios? So they use Allan Gray as the Woolies, as sort of the platform, but they then also buy Woolies meat, or they also use
the Allan Gray product.
Sure. I love the way that you're extending the analogy, because that really does speak to the benefit of it, right? Is if you come to Allan Gray for Allan Gray products, so if you come to the Allan Gray platform and you're invested in Allan Gray unit trust funds or portfolios, you tend to get them much cheaper from a fee perspective than you would elsewhere. So it's our products on our platform, and at the moment as it stands, you wouldn't pay an additional administration fee for that. You don't necessarily have to pay that. But if you have other solutions in there, so if you have, similar to your analogy, if you go to Woolies and you buy all gold, it's probably more expensive than their own store brand tomato sauce, right?
True.
And it's the same thing really with the investment platform. Is if you come to the platform and you're purchasing other management company solutions, you'll pay a slightly higher price in terms of administration, whereas with an Allan Gray product on our platform, you would pay less as a fee. But the benefit of it, and speaking to the benefits, Stefan, that you're asking is, well, if you had different solutions on different platforms, and if you didn't use a platform solution, and let's say you had 5 different accounts with 5 different providers, you would pay a fee on every single one of those platforms or providers. If you consolidate everything onto one platform, you are likely to pay less of a fee, because it's all about scale. And the more assets you have as a client, the less admin you are going to be charged on our platform.
And that's a great point, because I deal with a lot of clients that think diversification actually comes in by being invested on different platforms. And I always use the analogy to say it's almost like having a bank account with Standard Bank, with ABSA, with FNB, and you're actually paying transactional fees with all those different banks, opposed to trying to consolidate on with one bank and then just taking a credit card, a check card, and these different accounts, which then in essence, obviously asset classes is the diversification. We also did a nice episode on asset classes, but your consolidation is economy of scale.
I completely agree. I think you see it so often where you would look at a client's portfolio and you'd see, listen, they would have like a retirement annuity, for example, of Allan Gray, and they would also have a retirement annuity with Sanlam and PPS as an example. But with all those 3 companies, they think they are diversified because they're not only investing with one specific retirement need with one company. But if you look at the underlying assets, they might have Allan Gray balance fund in all 3 of those companies with their retirement annuity. And at the end of the day, like you said, they're going to pay a lesser platform fee, if I understand correct, by investing just in Allan Gray, having the Allan Gray balance fund at Allan Gray on the e-platform, as opposed to having Allan Gray balance fund at a PPS and a Sanlam, where the admin fee might be a little bit, or the management fee might be a little bit more.
Yeah, 100%. And even to extend on that is, if you are receiving 3 different statements every single month and you're trying to figure out where you actually stand, it becomes a bit of a mission. When you're doing your tax returns and you have to put your contributions in, you have to add them up manually because you're getting 3 different contribution certificates. Whereas if you consolidate your investment or your retirement savings onto a single platform, you are able to diversify it in terms of being invested in different places, but at the same time, it doesn't create the extra admin for you. It actually makes life much easier for you to have one view of all your investments in one place, but still be able to diversify the underlying portfolios.
Yeah. So Cedric, while we're on this value adding, I know Allan Gray's got also a similar view, is to always empower the investors. And I know you guys also add value by hosting client events. I specifically, invited some of my clients to one event one year, which was sort of client-based. So all the speakers were also addressing stuff in a little bit more layman terminology. Tell us a little bit about that, and what other similar events do you guys do, or what other services do you guys do in order to add value to your clientele?
Yeah, sure. One of the amazing things about our business is we actually have an investor education resource or department that focuses specifically on investor education. And if you think about the publications that you and I read, they're quite like highly intense jargon related stuff where, we understand what these acronyms mean, but the layman out there doesn't always understand what those acronyms mean. So we have an investor education department that basically simplify things for the ordinary investor out there. And in our quarterly commentaries, usually we'll have an article that is very basic and very simple, that people can understand. And it's a very basic and simple topic that is discussed in the quarterly commentary that allows people to understand those things. We also have insights on our website, and we publish a lot of content that clients can go and read, either on retirement savings, on tax-free investing, on exchanging foreign money into other investments, local versus offshore. We try and do this so that clients can understand these things in much simpler terms, and so that they can grow their own knowledge. So we do take investor education very seriously on the publications we have, the events that we have. If we have a business and investment update for clients, we try and simplify information in a manner that they can understand. So investor education is a big part of what we do.
That's awesome.
Then, Cedric, that actually brings me to the next question. In your view, what separates the Allan Gray experience from the rest of the market? Because we nowadays you tend to see that everybody wants to get a specific experience. They want to feel good. Yeah. They buy products that make them feel good and that they can post on all these social media platforms. So, in your experience, what's the Allan Gray experience?
I think for me, what I would say sets us apart, unashamedly so, is we really focus on one thing only, and that's building long-term wealth for clients. And that kind of sounds pretty flippant, right? Like everyone would probably say that. But to be honest with you, that is the underlying principle behind everything we do. If we're thinking about launching a new product, we ask ourselves the question, is this going to help build long-term wealth for clients? If the answer is no, we're less likely to go with an initiative like that, right? We always think about the end client at the end of the day. And if you look at the way we charge our fees, we believe, and we were pioneers in South Africa of charging performance-based fees. And we believe that performance-based fees really align our interest with those of clients, that clients only pay above a certain fee if we're outperforming on their behalf. And we share in their underperformance as well. So if our portfolios are not doing well against the benchmark over periods of time, we will share in a lesser fee so that the client is interests, they're aligned with ours. So we're incentivized to ensure that we outperform and we actually do a good job for clients. So everything ties back to that long-term wealth creation. If you look at the way that our people are incentivized and how we pay them, it's all based on long-term. Does this create long-term wealth for our clients? And if you're in a business like ours, our portfolio managers, for example, they don't get fat bonuses for outperforming in a year or 2 years. It's really that their incentives and what they share in the success of the business is all long-term. That a portfolio manager could leave Allan Gray and they'll only share in their success and in what they've built many years after they've left. So we try and ensure that we're all thinking about one thing. Does everything we do create long-term wealth for our clients?
Awesome. We've also seen a move in the market as we're currently speaking, where a lot of people feel they have to take their money abroad, create long-term wealth in the offshore space. I think it's a two-way question. The first question is, what is the difference between offshore and local investment? And then what sort of solutions do Allan Gray offer for clients that's looking to take money abroad?
Yeah, sure. Again, local and offshore is a key part of our business. When Dr. Allan Gray founded the business in South Africa, he focused predominantly on ensuring that investors could get exposure to investment markets in South Africa specifically. But at some point, he had a demand because clients wanted to experience what investments were like overseas. And if you think about the South African market, we probably make up less than 1% of the global economy, right? Of all the global markets. So you're missing out on about 99% of what's out there. And that's why as an investor, you do need to think not just local, but offshore. At Allan Gray, how we think about that and how we allow clients to access investments locally and offshore is that predominantly what we do as Allan Gray as an investment management company, we manage money and look for opportunities in South Africa. So, for example, if we're looking for shares, we're going to stick to the Johannesburg Stock Exchange. That's where we find opportunities. But if clients want to get offshore exposure, and in our portfolios, how we get offshore exposure is that we use our investment partner, Orbis. Orbis was also founded by Dr. Allan Gray. We share the same founder, we share the same values, we share the same culture. And when we are thinking about getting offshore exposure, it's about making sure that you have people on the ground in the economies where you're trying to invest. So Orbis is not based in South Africa. They are domiciled and based in Bermuda, but they have offices all around the world. So you can trust that if someone is sitting in Hong Kong, they know better than someone sitting in South Africa what's going on in that economy. So when we want to get global offshore exposure, we get it through Orbis, our investment partner that is a global player. But for clients that are thinking about getting offshore exposure in their portfolios, it is available in locally based portfolios. So when you think about offshore, I think most people think, I need to exchange money into foreign currency in order for me to get offshore exposure. That's not always the case, right? They are what you call rand-denominated offshore funds. And that may seem like a bit of a complicated thing to understand, but it's actually pretty simple. You can give your rands to a local asset manager or an investment manager, and they will take those rands and they will do the currency conversion and invest in a portfolio that is domiciled or denominated in foreign currency. And when you're investing in something simple like the Allan Gray Balance Fund, for example, some of that actually happens in the Balance Fund. But if you wanted like 100% offshore exposure through a mechanism like that, we have what you call feeder funds. And feeder funds allow you to do that as well.
This is also actually a nice investment vehicle that you can consider, because a lot of medical professionals, especially younger medical professionals, when we start having the discussion about investing, a lot of them don't want to necessarily invest in a retirement annuity because they have maybe the option to go work abroad. And when they invest the money into a retirement annuity, they can't access that funds again before the age of 55, as we know, unless you financially immigrate. But this offshore investing is maybe an option that they can consider and look into, where they don't delay any investments by leaving the money into maybe a money market or just a normal bank account, where they can consider putting it in an offshore solution if there's a potential for them immigrating.
Yeah, 100%. And I think the one you're also referring to specifically is if you're earning money in foreign currency, we have an offshore platform that allows you to invest in foreign currency as well.
Yes.
So you have two options. You can either use your South African rands to invest in a solution that does the currency conversion for you, or you can actually use foreign currency to invest in an offshore portfolio using your own foreign allowance if you're going to be converting, or if you're earning money abroad in foreign currency to do that yourself. So there are certain solutions. And I think, honestly, that because the world is so open these days, it really does make sense for you to have some exposure abroad too.
Yeah, definitely.
Yeah.
Cedric, we also deal with a lot of medical professionals that approaching the end of their career, that is starting to plan for retirement. And we see that a lot of them are invested in the GPF, the Government Employee Pension Fund. What solutions does Allan Gray offer for those individuals that is planning to retire from the GPF?
Yeah, sure. Like most civil servants, I think medical professionals are members of the Government Employees Pension Fund, or the GPF. And there are certain rules and regulations around how a member is treated when they reach retirement and the options that they have. So over and above being able to retire with the Government Employees Pension Fund, members have the option to go retire privately with a private institution like Allan Gray, for example. And the process really there and the solutions that we offer is that we allow members of the Government Employees Pension Fund to transfer their pension benefit into our pension preservation fund. And that transfer is a tax-free transfer. So there aren't any tax penalties that the client will have to pay for doing that. And once they're in our preservation fund, they can then decide to retire from that product, and then they can go and purchase a living annuity that is going to pay them a pension on a monthly basis, until the time that they pass away. So we offer the ability to transfer that money, invest it in a preservation fund, and then retire from the preservation fund, and then invest that in a living annuity. And again, one of the benefits there is that you have something called freedom of testation. Again, maybe kind of a technical term, but within the Government Employees Pension Fund, when you retire, they promise you a guaranteed income, which is awesome. Like you get paid a certain amount of money for the rest of your life until you die. But one of the things that they don't do so well is this freedom of testation. You being able to choose who gets your benefit when you pass away. Because of the way that the fund is structured, the Government Employees Pension Fund, certain things are a certain way whether you like it or not. So the fund itself is the one that tells you who you leave money for when you pass away. Whereas this other option that we make available for members of the GPF, when you're in a living annuity, for example, once you've retired with us, you have the ability to decide who gets this money if you were to pass away. So there's certain trade-offs, but I think we do have a very strong value proposition in helping members of the Government Employees Pension Fund explore a different option rather than just retiring with the Government Employees Pension Fund.
Cedric, and then for the younger professionals, let's say at the age of 30, 35, that's going into private space, but that's already built up a bit of wealth in the government pension fund. What solution, how can they move that money to Allan Gray? What type of solutions do you guys have to, again, utilize the tax benefits that is available by transferring that money tax-free?
Yeah, sure. So, I mean, there's two different products you can go into. When someone decides to leave their service within the civil sector and they no longer become a member of the Government Employees Pension Fund, usually they have the option then to say, look, they're resigning, and they then get told you can transfer this money tax-free either into a preservation fund or into a retirement annuity fund. And really the choice is up to the member. If you kind of think about what the benefits and consequences are, really the one benefit of being in a pension preservation fund, if you're an individual like that, is that you have the option of taking a 1/3 withdrawal before retirement in the preservation fund, whereas in a retirement annuity fund, you don't have that option. So maybe that's why one would consider the one over the other. But the real benefit really comes in when you're transferring that money into either product. It's a tax-free transfer. And then secondly, the money doesn't just sit there in the preservation fund or in the RA. It grows because you'll be investing that money in an underlying unit trust fund. And over time, as you approach retirement, as you're working in private practice and contributing to a retirement annuity fund somewhere else, this money also is growing so that by the time you reach 55, you have adequate savings to go on retirement.
Sure. So, Cedric, I think Werner is going to add on this one. We get the option quite often where clients are invested, and I don't want to highlight any specific company names here, but where they are invested in a solution that offers a loyalty bonus or that offers sort of a boost at retirement. How does Allan Gray compete to something like that? And why would you still say Allan Gray is sort of like a competitive solution in that? I don't know if you want to add maybe something.
Yeah, and I think it's a very important topic that we want to touch on, because when you sit with these clients, I think a lot of these boosts and cashbacks and enhancements looks very appealing. And when you look at other solutions that doesn't necessarily offer it. So yeah, I would like to get your view on that.
Yeah, sure. I think from Allan Gray's point of view, it definitely like boosters and bonuses and loyalty programs, that is not something that we're very good at. It's not our strong point, right? That's not our value proposition. We really want to run a simple business. We've always kind of focused on investment management and then providing top quality client service and top quality admin. Things like boosters and bonuses is not our forte. So I'm not going to burst anyone's bubble, but I think the value proposition from our point of view is we try and keep things simple. With boosters and bonuses and loyalty programs, there's kind of, it's a bit of a rat race, for lack of a better word, in that you need to do certain things to achieve a booster or a bonus. And I think something that clients don't understand is that these things aren't necessarily free.
Yeah.
Like you really do need to go into the finer details.
It costs money.
It costs money.
Yeah.
There's no money for free. I mean, if it was, everyone would be in a solution that offered a boost or a bonus or loyalty programs.
100%. Yeah.
The reality is that you do need to read the fine print and see, well, what am I paying for this? Usually there would be certain things you'd have to do, such as sticking to a certain health regime, or you have to contribute, or you're locked into a product, and if you exit the product early, you lose all those benefits and those boosters. So for the booster or the bonus or the whatever the loyalty thing is, there always has to be a catch, and you need to be comfortable that you're happy with that. If you think at some point you may not want the product anymore, just be comfortable that you're also going to lose the booster. I think our value proposition is that when you come to Allan Gray, you're coming for a simple solution that's easy to understand, and you know exactly what you're going to get out at the end of the day. So we'll disclose everything to you up front, and you're not having to work for something that is going to cost you something that you don't know. And that's really the value proposition from our side.
Yeah, and I think also to extend to your point is, I think if you look closely, obviously it's case by case, but if you look closely to the exponential effect of keeping it simple, keeping it lean, and that exponential effect over a term of 30 or 40 years, it certainly in most cases outstrips a bonus in any case. So obviously case by case, but that's something that I've also picked up and found is just by keeping it lean and simple for the client over years, he actually gets more market exposure because of lower costs, and that effect is massive over time.
And also to give the client more certainty of what he would have available at retirement. And I think it's also very important that when you do that type of planning, that you have to do the planning still lean, even though you are making use of a bonus or enhancement, to not take that enhancement or a bonus into the equation when you do that planning, because otherwise you might be disappointed, because it's, like you said, it's not a guarantee that you're going to get that booster or the enhancement or whatever you want to call them.
Yeah, of course. I mean, I think as financial advisors, right, Stefan Vanner, you guys know best. You've seen this, and you know what's out there in the industry. But if someone, God forbid, you lose your job or you're unable to pay your premium, what happens to your booster that you've been paying for the last 25 years, for example? Does that just get thrown away?
And unfortunately, that's the reality. I think we've experienced a lot of that now with the pandemic that we are faced in. You might have been very up to date and loyal with all of your payments, keeping up.
Sure.
But a lot of things are beyond our control. Nobody expected a pandemic to happen. Exactly. And you might be retrenched, and then you are forced. You can't basically. And where are people cutting on? They are cutting on retirement savings or any investments, because if you have to put bread on the table, that's the first thing that you're going to stop.
Exactly.
Cedric, then lastly, maybe just give us your elevated pitch. Why Allan Gray? Why would somebody then invest in the company, the brand itself?
Yeah, sure. I mean, again, we have over 40 years experience in South Africa and abroad, managing money, providing solutions to clients. We are the largest privately owned asset management firm in South Africa. And I say that because it's a testament really to the fact that many South Africans have entrusted us with their life savings. And I think if that doesn't tell you anything about how people trust the brand and what we've been able to do for people over the last 40 years that we've been in business, I don't know what else would be. But we are a company that's exclusively focused on making sure that we build long-term wealth for clients. And as I mentioned earlier, that's something that is the underlying principle behind everything that we do. We have an impeccable client servicing team. I've been part of that team before, and I can tell you, we try and make sure that at the end of the day, when a client picks up the phone and interacts with us, at most times, and I don't know how you can compare this with many other businesses, if you call us and someone picks up the phone, they are likely to be the first and last person you speak to, regardless of the question that you have. So you're not being transferred to a different department to answer a question. Our client servicing people are graduates. They're very smart. They're highly talented people that answer the phones and are there to service our clients. But also the admin at Allan Gray is also impeccable. We try and make sure that we do everything we do with the client in mind. So if you're considering a platform to use or provider to use, Allan Gray has been tried and tested, and our track record speaks for itself.
And I think Stefan and myself, we can also attest to that. We were actually having a conversation the other day, and we were talking about a Section 14 transfer that we are busy with.
Yes.
And Stefan said just how quickly the kind of things happens at Allan Gray. The service that we are getting from your back office are just impeccable.
Yeah. And I'm also not just saying it because you're here, but it's so true what you're saying with people on the phone call. Like even for us as an advisor, if you need something for a client and you phone the back office, they sort you out immediately. So, and it's so rare these days, it's just one of those things that's like really, really rare. So no, awesome. And thanks again for joining us today. It was really a pleasure talking to you.
No, of course. Thank you so much for having me. I mean, I hope our listeners are going to get some really good information, but thank you guys for what you're doing and providing this info out there for all these young people and maybe fairly older people that need to hear it.
Thanks
so much.
Cedric.
So this brings us to the end of the episode. Like the goal of this platform is to add value and to help you and empower you to make informed financial decisions. If you found this episode valuable, please also go to our website at www.moneyandmedicine.co.za, where you can listen to similar content like this under the episodes tab. we want to thank you, and until next time, plan.
Plan.